Knowing what a day trade is and what exactly counts as a day trade is especially important if you have to abide by the PDT rule. Because if you have an account balance of less than $25,000, then you will only be able to make 3 day trades per every 5 business days. Now, a day trade does sound pretty self-explanatory. It's exactly how it sounds, but there are some certain situations where it could be a little confusing. So I'm going to explain what exactly a day trade is and show you some examples on where you need to be a little careful. Now, a day trade is defined as a buy and sell or a short and cover of the same security within the same day. All right, so let's break this down a little bit. The buy and sell of the same security within the same day. All right. If we bought 500 shares of Twitter at 12 o'clock p.m. and then decided 2 hours later to sell all 500 shares that we've previously bought, then that will count as one day trade. We bought and we sold the same stock within the same day. What if we bought in pre-market at 9 o'clock a.m. Eastern Standard Time and then sold in post-market at 5 o'clock p.m. Eastern Standard? It's still a day trade. Pre- and post-market hours count as well because it's still within the same day. Pretty self-explanatory. Same goes if we were shorting stocks. If on Thursday we wanted to short 100 shares of Twitter at 10 o'clock a.m. and then 5 hours later we wanted to cover those same 100 shares at 3 o'clock p.m., then that will count as one day trade. Again, pretty simple. But here are some situations that can make keeping track of day trades a little tricky. Let's say on Monday we bought 500 shares of Twitter at noon and then buy another 500 shares at 2 o'clock p.m. And then we sell all 1,000 shares at 3 o'clock p.m. How many day trades is this? Well, it really depends on what your broker counts as a day trade. Because it's interesting, not every broker has the same view on what counts as a day trade. So for you as a trader, it's important to contact your broker to find out what exactly counts as a day trade in certain situations. They should have some list or some type of documentation explaining how they count day trades, but they usually count them in one of two ways. I think this is going to be the most common way, and that is the change in direction method. And an easy way to think of this is to pretend that all buy orders go to the right while all sell orders go to the left. A position has to go in one direction, then back the other direction to count as one day trade. So if we buy a stock, that is considered one direction. It's going to the right. Then once we sell it, that is considered the opposite direction. It's going to the left. Now, since we had this change in direction going from the right to the left, that is considered one day trade. So let's go back to our example here. If we bought 500 shares, since this is a buy order, we go to the right. If we bought another 500 shares, we go to the right again. Is this considered a day trade because we made two trades? No, because we did not change directions. Now, if we sold all 1,000 shares that we have accumulated from our two buy orders, we would be making one day trade because we have changed directions. We went to the right, then we went to the left. Now, let's do another one. Let's say that at 10 o'clock a.m. you buy 500 shares, and then at 12 o'clock p.m. you sell half of your 500 shares, and then at 1 o'clock p.m. you sell the rest. How many day trades is this top row up here? This is one day trade because we went to the right and then we went to the left. We changed directions one time. And then you decide an hour later that you want to buy another 500 shares at 2 o'clock, and then at 3 o'clock you sell all those shares. How many day trades is this total? This is going to be 2 day trades because we are changing direction twice. We go to the right, then we go to the left. That's one change in direction. Then we go to the right again, then we go to the left. That's another change in direction. 2 day trades. Now, here is the other way some brokers count day trades. Some base it off of the opening transaction in a first in, first out method. So let me show you what this means from our first example here. If we bought 500 shares at 12 o'clock, we are opening a position. The OT stands for opening transaction. If we bought another 500 shares at 2 o'clock, we would be opening a second transaction. All right. But if we decide to place a sell order for the total accumulated shares for both orders, we are essentially closing out both opening transactions, making this 2 day trades. All right, so this makes it a little confusing, especially if you are scaling in and scaling out of positions, which is why before you start doing that, you need to contact your broker and see how exactly they count day trades. So I hope you all learned something from this lesson. I want to thank you so much for watching.